In this Chapter 14 overview video, as always, we'll begin at the home page inside of our course shell. I'll either go to the modules link on the left side, or I'll just scroll down to the Chapter 14 link under modules there, taking me to the week 4 or Chapter 14 section in the modules for this class. Then I'll just go over to Chapter 14 lesson and homework review link. And as always, here's the chapter overview tab. This is where I will be placing this video once I'm done with it. Here is a little detail regarding the learning objectives for the class. As you know, there are actually 8 of them, 8 learning objectives. They all relate to long-term debt. The first learning objective relates to mortgage payable, long-term notes, and the rest of these are mostly about bonds. They're both long-term debt. The instruments, then I'll go over to my lecture notes and homework review page or tab, and there, as always, you have the links to my external Google sites for Chapter 14 lecture notes and homework review. I'll click on the notes and it takes me over to this tab inside of my Google site for this chapter. Here's my chapter overview, and as usual, you have a detailed outline of the learning objectives. Notice again that LO1 is long-term notes payable and mortgages. LO2 is all about the accounting for bonds, starting with a general description of what they are. Down here you have the actual journal entries for issuing bonds at either face value, discount, or premium. You will learn about this throughout your reading. Then we have another LO that relates to the retirement or the call of the bonds at the end of their life, or at times it will be done before the end of the term of the bonds. Either way, they're recalled and they are not taken out of the hands of the investor. There's also a section LO5 that relates to reporting liabilities. There's always one LO that relates to some kind of financial statement analysis type of topic that relates to each of the chapters. And then at the end, you've got LO7, LO8. These are actually quite important appendices that we have to cover as well. The first one is time value of money, and there will be a different set of handouts and possibly a video that will further explain this concept of time value. And there's also another appendix that relates to a method of amortizing the discount or the premium, and also of calculating interest expense. And again, very important with respect to bonds. So there will be another video or handouts that relate to that LO. Here's some more detail on each of those learning objectives. And what I'm going to be doing now is I'm just going to go and quickly go into each of the related LO pages. LO1 has a little more, some exhibits and some minor notes on that initial topic, with a couple of different videos that further explain this topic. So down here is the solution to the LO1 triad that is in your book. There's also LO2. Again, this is mostly general background information about bonds, and so please do read that in the textbook, plus come here and maybe go over these well, at least in this case, one video. LO3 is where we start doing the actual accounting, a little more info or notes on that. Notice that one of the things that they say here is that when you are issuing bonds at a premium or discount, you will have to amortize that discount or that premium. And to begin with, they ask you to do it using the straight line method. To simplify the accounting, we do that initially. But as I mentioned previously, there's an LO8 appendix, And in that appendix, they will show you how to amortize that premium or discount, and also calculate the interest based on a different method. That's called the effective interest method. That is more realistic. So we have to learn first using the straight line method, and then later through the appendix we'll be learning the second way to do this. Either one is a gap, unless straight line ends up being the difference between straight line and the effective interest method. If it's too different or material, it would not be allowed under gap. So that's just one thing to keep in mind, a little note. LO4, 5, and 6 are all about either retiring, and in my notes you'll see that I will combine LO4 with LO3. So even though it's here grouped with LO5 and 6, actually I will switch this and put LO4 with LO3. LO5 is simply about reporting, and again, debt to equity ratio is discussed in LO6, and here are a couple of videos. These are don't spend too much time on especially LO6. The other thing else, again, LO7 is here. A little more info about present value and about time value of money. I'll show you different handouts that I further explain this topic, and here's the one about the effective interest method. The review is here, and then the homework review page, as always, lists all of the assigned and unassigned homework keys, and these are going to be important in this especially in this chapter. It's a complicated chapter, so do take your time to review these handouts or these answer keys. In the file cabinet, I do have several handouts that I think are going to be useful. To begin with, there's the one that says bonds, GIEs, issuer. That's a one that will give you a nice overview of how to account for bonds from the three perspectives, from issuing at face, at a discount, or at a premium, given the very same contract rate, same term, and then same and differing actually market rates, because that's what really distinguishes between issuing at a face, discount, or premium. You find that out as you read the textbook. Now, with respect to accounting, given these initial sets of given info for each scenario, you have these tabs at the bottom that provide you with the resulting journal entries, and so you can follow this along and review it, and then you can actually ask me questions in the discussion boards if you wish. So the first one here is issuing at face. Second scenario would be issuing at a discount, and the third scenario is issuing at a premium, and you'll see there's obviously some differences. So please study this handout. The second handout that I would recommend that you look at is the 1b-sp2-ch14-TT, and so if you go there, it's similar to the other one, but it has a little few more scenarios here. So here you're going to be, as you know, is the first tab. By the way, you're looking at the sort of the index of the tabs in this worksheet, and so you're going to be, if you go to tab 1A, that's issuing at par, tab 1B at a discount, premium, but there's also 2A and 2B amortizing the interest, or amortizing, I'm sorry, the discount, plus calculating interest based on the discount scenario. Same with premium. You also have a retirement entry here at the end of the term, and one for retiring a bond before the end of the term. And so you go down here and you look at each of these separately. Now, note that in this case, I do detail exactly how the number is derived. So you can actually, again, review how this is done and then ask me questions in the discussion boards. So here's again tab 1B, tab 1C, and so on. I follow the very kind of the same format for the answers in each case, so you can follow along. So hopefully that will be helpful for this chapter. Enjoy.